All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today, I hope you can tell I'm very excited because we got a lot of things to talk about. And whenever we have a lot to talk about, I am super excited. So today we're going over KLIP. KLIP actually just paid out a dividend. So what we're going to do is we are going to get into that. What as well I want to show you is just why I do like KLIP so much, just due to the fact that the price action doesn't exactly track the underlying stock that it is tracking, which is KWEB. KLIP tracks KWEB, but we're going to get into all that and more as well. I also want to get into SQY and Square and show you guys why this is fantastic. Square stock price is right back up to the marker which it hit a few days ago, showing that it's strong. It's going right back to this $80 marker, which is exactly what we want to see because we want to see this blow through this marker. And I want to kind of talk about the chances that it has to kind of push through this marker, which I do think are pretty good. And as well, I want to talk about PYPY. This is the Yieldmax PayPal Option Income Strategy ETF. Look, I'm not trying to throw all these Yieldmax ETFs onto you guys. I'm saying you guys make whatever decisions you want to make. But when I'm looking at the underlying PayPal, I see a great pattern, kind of similar to what we see in Tesla, kind of similar as well to what we see in Block, where it's kind of hitting these highs. And the one thing I really like about PayPal is that the financials are actually really good. It keeps hitting bigger and bigger numbers every single quarter, yet the stock keeps dropping. So I want to talk about that and what could be in store for PYPY, some pretty crazy dividends. So that all sounds good. Please do remember to subscribe. We are up to 4,145 subscribers every day. Slowly, very slowly building some subscribers. Look at this. We got 500 views on the last video uploaded a day ago. I'm grateful for that. Thank you guys. Thank you to everyone who's watching. I hope I'm providing value. If I am, please do remember to give this video a like. But enough about that. Let's talk about KLIP's dividends. So KLIP, the Kraneshares China Internet Covered Call Strategy ETF. This is a China Internet ETF. Basically, they write covered calls on KWEB, which is the China Internet sector. And you can see here, in 2020, they had a massive run up all the way up to about $90, a huge bear market where we currently sit at for the past year. It's been still kind of trending down a little bit, and we're currently sitting at $25.55. As for KLIP, KLIP has actually also been trending down with the downtrend in KWEB. KLIP has also trended down, but what I'm really excited for in KLIP is that if KWEB can appreciate back to markers, even it had like 5 years ago, for example, up to about $50, that is a double in KWEB stock price, which I wouldn't say double, I'd say maybe about at least 50% of a boost to KLIP share price, which would take it back to break even while receiving a 50% dividend on KLIP's price. KLIP's dividend. So I know that might be a lot to kind of digest there, but basically KLIP would get back to break even. You'd still be receiving a 50% dividend. And yeah, that sounds pretty good to me. That's a 50% return right there. So what I do want to show you here is KLIP's dividend came out to be 61 cents, which I think is fantastic for KLIP. Obviously, as the share price goes down, the dividends are going to decrease as well because you see 4.06% of KLIP share price went to that dividend. That was obviously based on the past month. They had a good run up because KWEB, the underlying stock, also had a good run up. And if it can kind of continue this, kind of break through this marker here of about $25.55 and get to about $28 or so, that's going to be another good dividend and good appreciation for KLIP. Because you could see here, it started the month at about $14.27. Even though it paid out the dividend, we're still higher than we finished on the, or higher than we started on the month. So you could see here that as KWEB grows, KLIP is growing, and yet it's still paying out 50% dividends. So that's why I wanted to bring it to your attention. Obviously, they pay monthly. So that is KLIP. That's a little update on KLIP. Now let's get into Square, because this is one I'm also super excited about. Look at this. We're back up to $80, $79.84, 16 cents less than $80. Okay, don't judge me here. Don't blame me. Look at this. Basically, Square in the past, during COVID, everyone was switched to kind of forced to do things online. So Square's business obviously really kind of benefited from that. Yet they're still making more today in their financials than they were back in 2020. You could see here, 2020, the revenue was $9 billion, and it's been growing ever since. And this is exactly what we want to see month by month. Square's income is growing. Sorry, their revenue is growing. And you could see here that they're really reinvesting. They actually weren't even really profitable until about this year. And that's something fantastic to see. Obviously, you need your companies to be profitable if they want to grow, but Square has been doing a lot of reinvesting, and that is exactly why they were showing those negative numbers on the income statement. But now we look at the past year, we can see $80 is such a key level. We see $80.88. We see $78.36. Once again, so 4 times in the past year, Block has hit $80. It's been its biggest marker, and yet we have, I think, the best opportunity to kind of break through that, as we had a huge jump all the way up to $80 off good earnings that Square continuously posts quarter after quarter. So it's only a matter of time, in my opinion. Obviously, just my opinion, but you could tell it's a strong opinion. See, it hit $81, kind of had a bit of a pullback as people weren't sure, but got right back up to $80. So that's a fantastic sign. Look to see if Square kind of breaks through that $80 marker, and where could it potentially go from there? To be honest, I'm not even sure, because we haven't seen that marker in a very long time. It could push up to $130. It could push up to $270 on a very, very bullish basis. But really, I think if it gets through $80, we are going to see $100 in Square, and we're also going to see a big jump in the Yieldmax ETF. This is something that I own. I own 22 shares at an average share price, let's see here, of $24.35. And at the current share price, with all the dividends being paid out, I've definitely received more than my fair share in terms of returns from SQY. So that's SQY. And now, last but not least, we have PayPal. PayPal, also very exciting. PYPY is the Yieldmax PayPal Option Income Strategy ETF. The reason why I mention it, okay, look, over the past year, nothing really exciting, nothing really too crazy, just kind of fluctuated up and down. Has, I say, a measly dividend for the Yieldmax ETFs. I think it's sitting somewhere about like 20% or so. But the reason why I wanted to show you this is look at PayPal's financials. PayPal has been growing their financials kind of quarter after quarter pretty much. Let's see here, since 2023. There was a bit of a dip here in 2023, but it's back up and rolling. They're growing their income every single quarter, and yet their stock price is falling every quarter. This does not make any sense as kind of a value investor standpoint. If your company is growing, your stock price should be growing. And if Warren Buffett would see this, I think he'd be drooling over this. But obviously, that is also a very ridiculously bold statement to claim. But what I would say is, as they're growing their revenues, you're looking at a company that's doing, what are they doing in terms of revenue annually? They're doing, let's see, income. You're looking at a $4 billion revenue every single year. They are a $65 billion market cap company, so it is understandable. But I just think the share price is a little bit undervalued, considering that they were all the way almost up to $300, which would have been a crazy marker at about like maybe $250-300 billion. So I do think PayPal has the opportunity to grow if it does kind of get out of this downtrend. Here you can see here it's constantly trending down. You have 75 was the high, you have 73, which was the high, you have 65. But if they're able to break through the 65, create higher highs, that could potentially mean a bull run for PayPal, PYPL, and then the Yieldmax version is obviously going to greatly benefit from any kind of increase like that. You're going to see the stock price definitely go up, and you're going to see the dividends definitely go up. So PayPal is one that I'll be looking into, and PYPY might be a stock that I might be currently purchasing in my account just due to the fact of this fantastic opportunity that I potentially see here. But I'll keep you guys updated on all that. So today was just a quick video that I wanted to show you KLIP's dividend, how, you know what, it's staying strong. It's always staying strong at this 53% marker. It doesn't necessarily fluctuate as much as TSOY because it does track an ETF, the China internet sector. So it's a whole sector. It's not an individual company. It's a basket of companies in the China internet sector. That's what I like. Also, SQY with the potential opportunity of a pretty nice breakout. And I think PYPL, PayPal, has the potential of a breakout, but it might take a bit more time. So I hope you guys did enjoy this video. If you guys did and found some value in it, please do remember to subscribe. We're up to 4,145 subscribers. Not trying to waste any of your time here. I hope you guys have a great day. I hope you guys enjoyed, and I hope to see you guys in the next video.